Still talking about life insurance and just trying to get good, reliable information out there so that you can make an informed decision on how to love your family by making sure that they are protected if the worst were to happen and you were to no longer be here. And so last time we talked about the things to think about that you need to cover. And this time we're thinking about the types of coverage. There's really only two main ones that you need to know about, and you may have already heard these terms, but term insurance is setting a term or a period of coverage at which the end of that term, the coverage either goes away or you have to do something called converting it to a more permanent policy or extending annually the length of coverage at the current rates. So term coverage can be often in increments of 10, 20, 30 years or anywhere in between, and is significantly cheaper than permanent insurance because the insurance company knows how long they have to be risk exposed with your insurance policy. The other version is cash value or permanent life insurance, where as long as you keep making the premium payments, they have to keep your policy in force. And that usually constitutes building up some cash value that you can use as life goes on. And so this is more expensive, but it is permanent coverage as long as you make the payments. And there's some unique strategies in there where folks can actually use that as being your own bank. So building up cash value that you can borrow off of. That's where you hear infinite banking come into the discussion. And then there's also some other creative ways that folks can use permanent insurance as long as they're aware of the pros and cons, because any decision you make is going to have pros and cons. So hopefully this is a quick briefing on the two main types of insurance. If you want a further in-depth dive about your specific strategy, never hesitate to reach out. I have all the resources that you would need to support you. All right, we'll see you next time.